Hello traders, good morning, good noon, afternoon. Happy weekend and a wonderful trading week to everyone. I hope you enjoy your weekend and that you are ready to rock for another good trading week. Previous week was amazing, one of the best cycles talking for the big targets talking. Not the intraday, not the scalping, not the systematic short-term trading. I'm talking about the big cycles and the big targets. We have been expecting the pound pairs to be the best pairs on the previous week, and they were. And the chart you can see here is the pound yen, and he was one of the best pairs to us, which I will explain in a second. So let's see here. Okay. So basically what we have been planning on the entire previous week is the breakout of this range, right? And we said while we hold, just change the color of the pen. Okay. By the way, you see I'm fresh now, guys. Well, haircutted. So basically, I want to explain this pair because we have been following it for a couple of weeks now, even a bit more. And I want to explain the full picture, why such opportunities are the best. Now, you know I always talk about cycles, and to join to the biggest cycles, right? The bigger cycles, the weekly, daily charts, and to join the real money flow, where the real money goes. If we can combine these few time frames we work with, it could be weekly, daily, and 4 hour. It could be monthly, weekly, daily, and it could be daily, weekly, daily, 4 hour, and 1 hour. Depends how deep you want to go. But when we can combine all together, we get the best opportunities. And yes, they take time until they develop and reach the target. But when they do, that's where you catch the big fish. So sometimes it's better to wait for this one big fish that could be enough for a month of eating than try to catch these little fishes that you will just need to let them go or just feed someone else with these little fishes. And that's same with trading. And I always love the investment ideas. Why? Because it simply allows you to sleep like a baby and to trade free of worries. Well, of course, if you know to manage your risk and your total exposure, it's very important factors, which we talk about, of course, every single time in the Traders Academy Club. And these factors are crucial to the success. And if you have your patience and your risk managed, when this move comes, these moves come, you enjoy the entire ride. You don't have this fear of missing the take profit, right? How many times, with a raise of the hands, guys, how many times you found yourself sitting in front of a trade, like, maybe I close now? It was moving. Now it seems retracing 5 pips, 10 pips. Maybe I close, right? It's better. Even if there are no signs against you. If there are signs against you, like divergences, end of cycle, I can understand. False breaks. But if there are no signs against you, what the sense of closing it? And let me explain you what I mean here. It's very simple. We have been talking about the special cycle we got here. We have been expecting it to make a double wave up. We have the target from 38 to 50, according to the rules. And we were here on the bottom 2 weeks ago. Now, weekly is up, no doubt. Daily. On daily cycle, we've had a range. It was more like a triangle range, but it was a ranging pattern, right? So, every time we are on the bottom of the range, we are looking for buys. What happened on the weekly chart is, inside this range, we got triple cycle down. Every leg down is a cycle by itself. Every leg up is a cycle by itself. That means this range is very powerful and the big money is inside creating these opportunities, these moves. On the 4-hour chart, by the rules, we got a false break followed by amazing bullish divergence with a Bollinger Band duplication zone. We got a convergence. We got a rally. We got 1, 2, 3. And from that moment, we were expecting 2 waves down or a ranging correction, which we got right here. With the breakout out of this range, game is over. What we get here is weekly up, daily up, 4-hour chart up, triple cycle up with ranging cycle correction at the end of the convergence. What else can we ask for? This is, if we compare it to chocolates, this is the best of the Belgian chocolates or the Swiss chocolate. You call it. What's best? What's better? And there is still the South African chocolate, which is amazing. But this is the top quality. Okay, this is the Lindt of the trading. And why? Basically, why it's so important to connect these cycles together. Let me just see where my mouse gone. So here we go. So basically, why it's so important to connect all that together, because that's where you get your biggest chances for the best of the moves. And if you can see that on that very moment, we are risking our risk reward is 1, 2, 4, 5, or 6 times bigger. So for every one risk, we get the entire move, and we are still on the upside. Pullbacks now reasonable, possible, because we are bouncing at 38.2 of the weekly cycle. But there is an amazing chance we will get it going all the way to 160. Why not? And that's what I'm talking about, guys. One move like that, and actually we had few. What I'm showing the pound yen, it's obviously clear. One moves like that per month. That's the average. Isn't that just better than 100 small moves? Small moves, tiny moves from 5 minutes or 15 minutes for 10, 15 pips. Isn't that better? Will not that just require less from you? So you come prepared. You have your time to put it all together. You have your time to analyze. Boom, it happens. I always prefer the long-term trading. Now, of course, for small accounts, it's not really useful. And small accounts should try to grow first of all in order to be able to do that. But for those of you who already play the big money, why to waste your big money on small moves? Why not try to get your money on big moves? Think about it. I'm not here to convince. I'm just giving you my view, and because we have been exploring. If you don't believe me, guys, or if you're just new to this channel, go back on the previous weekly reviews, 3-4 of them. Watch us talking about the pound yen, building up this plan entirely. And once it happens, it happens. And it's not just the pound yen, it was the pound kiwi that we have been long since the breakout of the range, which is now seems so far away. And guys, that's 700 pips to the upside. Yes, it was a bit slower at the beginning, but it's 700 pips upside within 2 weeks. So you tell me, doesn't it worth to wait for that? Pound franc, we have been long as this zone holds. You tell me, doesn't it worth to wait 2 weeks and we are 700 pips up? Pound dollar, as long as the trend line holds, we are bullish. Been talking about it for a long time now. You name it, guys. And pound yen was, of course, the best one. Pound CAD from previous week also with the break of the trend line at the end of the cycle provided an amazing move. No, it's not 700 pips, but it's really impressive move. And again, it's all about the risk reward here, guys. Check this out. That's basically considered to be the entry. That's basically the protection. And we are now 3 times higher. So, you tell me, does it worth to wait for the best of these opportunities or not? From my point of view, yes. And such opportunities, when they come, they are not ones that allow you to join. And that's why I said at the beginning of this video, systematic trading cannot work in such moves because it goes one way. Systematic trading is more on a very, on more, not very, but more quiet conditions, when the moves are technical. That's where the systems come in play. So they can analyze the patterns, 2 waves retraces, bend to bend moves, divergences, so on. In such cases, when it's skyrocketing, no system on earth can recognize that. And that's the power of the cycles. It's the power of the swing trading. You wait for that. Sometimes it's a month, sometimes it's a bit more. In average, it's at least 1 pair per month. That's the average. At least 1 pair per month. You get a move. Sometimes it happens all together in the same month, like it happened now with the pounds. That's all. So now, let's talk about the opportunities that we have for this week. But first, what's important fundamental? By the way, guys, we have this calendar now from TradingView, Forex analysis, economic calendar, and you can find the most important news that we expect this week. We have it, the Eurozone inflation on a monthly and annual account on September 18. On 19, we have the Ftse economic sentiment in Germany. That's very important to pay attention to. On September 20, that's the hardcore of trading, the FOMC meeting points and meetings and the decision, fund decision, and of course the policy statement coming after that. September 21, we have the Bank of Japan rate decision with the monetary policy to be published and discussed. Eurozone consumer confidence also on September 21st. And September 22nd, it's all about the Canadian news. We have the CPI, the core CPI, and the CPI inflation. And I want you to pay attention to that because the CPI inflation annual now is 1.5. That could go and reboost the bulls of the Canadian if the numbers turn to be healthy and good. So what are the best opportunities as they are for this week? So first of all, the pound pairs. The weekly cycles are still up, right? Now, as long as we don't have any false breaks or triple moves down on the lower time frame, like the 4-hour chart, so it's buys. So every pullback basically is yet for a buy. We don't really have divergences against almost nowhere. Okay, the daily here is without divergence. They all come to extreme points, but this extreme could be short-term pullbacks, the short-term stoppages, and short-term, it does not mean 15 minutes pullbacks. It doesn't mean 10 pips or 50 pips. It could be 100 points, it could be 200 points, but we don't care. We just need the pullbacks and to rejoin. For those of you who ride, the most important thing on such rides are not to miss the party. And not to let the profits go. So the best thing you can do in such cases is first of all to make sure you cannot lose, which means move your stop loss forward. How much forward? At least to break even. But then basically what we need is to find the levels where false break was trying to happen, and like here for example, it's not a valid false break, it's just an example, okay? Let's assume a false break happened and this is our low with a spike, right? And then it's rallied. This would be the low we would protect. Why? Because below this low, it could turn the entire game for a convergence principle, and we don't want to do that. And now on the 1 hour chart, also we don't have even one false break, so we don't have a reason to do nothing, right? So the pound pairs are basically all of them. I'll just show you one, but it's all of them completely. Moving up, once we will start to get the false breaks patterns, like something like that, and then the lows to be broken, that's a warning sign when after the next rally you will want to trail your stop loss to that area, and this way guarantee your profits anyway. Okay, and for longer run there is still a very good healthy chance that we are for 50% of it, and that's 160. That might take time, that might also change. Watch carefully, guys, especially for the yen pairs. That might change due to all the geopolitical and political risks we have right now between US and North Korea. We never know when and if such thing can explode. We never know what could really happen there, so we have to play carefully here. By technical, we need false breaks and convergence. This is where our plan, the bullish plan, change. But as an alternative, there is also a chance we're gonna get 1, 2, 3, especially after such vertical moves. If we get 1, 2, 3, triple cycle down, followed by double cycle correction and a breakout of the trend line, that's a warning sign that it's best to step back from the buys. And short term, possibly change to sells. Make sense? So, as long as none of the scenarios happen, for none of the pounds, we remain bullish on the pound. So, by the way, why the pound is so strong? Check this euro pound. It's amazing. We have been following the euro pound for a while now, and we called it a top. It was just amazing. Really, it's one of my best pairs that I made my money on this week, last month, not week. Together with the pound yen, it's really. It was worth to wait for that. That's what I'm telling. That it was worth to wait for that. It's when you order something online and you are waiting for the package and you get it. That's what it is. That's how it feels like. It's finally here, right? Your new toy. So this is kind of my new toy, our new toy, the trader's new toy. To get these moves. Now euro pound, as we've been talking about that, but before that I started to talk about this, and my mind is completely confused when I see the moves. The pound got stronger because of the amazing CPI, which increased immediately the expectations from the Bank of England to take the moves forward and increase the rates on the coming meetings. Maybe on the coming meeting. The last week they didn't, so maybe the next one they will. So the pound is gaining the strength immediately as expected. Euro pound is also an amazing opportunity because we have this triple cycle and we have the range, so we could get going to the bottom of the range or even here the middle of the triple cycle, which is the gap zone from Brexit. Guys, check this out. 081.50 zone here. See that? This zone is from Brexit period. This is right, and it's pretty crazy. You see that? Okay, check this out. So we can get going all the way to the bottom of the range and even more. So that means, in other words, we stay bearish on every rally in 2 waves, daily or 4-hour chart, because we joined the weekly, right? So every 2 waves on the daily or 4-hour chart sells. Now in terms of levels, let's check the levels out. Where are the levels here we have? That's very important levels we have here, here, and here. That's from daily and 4-hour chart. We have it a bit closer, 1, 2, and then the next one a bit higher. These one are very critical levels. By the way, just want once again to show you guys, the crystal ball called us a top on 29. Okay, you can see here 29. Where is my pen? Is the best days for tops. This day was when? Let's check this out. 29. Not a day after, on day before, which are acceptable deviation of the statistics. On the exact day. And this is why I always say statistical indicator, not strategy. Statistical indicator is extremely important one, especially for the swingers, those that love to ride, for swing traders. It's amazing calls, and we want to have it when we go for a ride. Also with, where is this one? Okay, you see the date yourself, guys. We are talking on 23, 24, and we have the days 23, 22. So we got prepared here, and we were expecting for the bottom. Boom! You check yourself, you see yourself. It's more than 1,000 pips up already from the bottom. When it comes together, cycle, setup, and statistics, that's where you want your money to be in. Doesn't matter what strategy you trade. Just let it go. Just let it go. That's what it is. So the euro pound also is wonderful, and we have plenty of room to go. I think I said it all for the pounds, right? As long as we don't have the the change of the directions by false breaks and convergence, we are bullish. As simple as that. Pound franc also has more room to go. This is the double cycle down. The 38.2 is slightly higher. It's almost there. It will be great to start and cashing out first partial, but later on there is a good chance we are going to 50, since this could be counted as a descending triple cycle. So that's for the pounds. Now let's continue, guys. Eurodollar. Now this one is a beast, unreadable beast from my point of view. What do we have here? We have here levels from weekly, which is also around resistance, and we have the daily cycle, which is the special cycle for the around. Now we had one false break, two false breaks, and yet the Eurodollar refuses to create lower lows for us. Too tricky. We would want to see this one broken. On the 4-hour chart you can see that a bit better here, and yet it has the problems. So I can say here in that case I wanted to see this breakout. We still might. If we will, that's amazing call. But the Eurodollar currently is still bearish, because it could be considered as a ranging pattern, and every rally could try to make down move. I'm still bearish in my mind with here, but this is really, as long as we're below this high, this is really not the best of the pairs to trade, and simply because it doesn't have the best of the setups. You see the differences now, guys. It's the euro pound was amazing cycles with convergences. Pound yen, amazing cycle, divergence, convergence, triple double formed. Here, nothing. So yeah, we can still look to sell around this, definitely, but is it really the best opportunity? No. And if we break above this area and hold there, we are for 124, 126 zone, where from I believe the top would be completed. But there is still a but, and I think as long as this top holds, we're still good to sell rallies. We need two waves or top of the range, so that could be any of these scenarios, and then with the breakout we can go and resell, look for resells, or we can have the range here and then sell top of the range. And that's the Eurodollar. Tricky, not the best, but for those of you who insist to trade it, that's how. Then the next one is the Euro Yen, another amazing one that broke the range, and if it will manage to hold above it, we are going for the next levels, which should be, let's put the cycles on, which should be right here. That's 137. There is a huge chance we are for that, going to there. Pay attention, guys, to the geopolitical things and all the North Korea, US thing. If we reach that with the double cycle and the triple cycle on the second leg, that would be the situation where I call, boy oh boy, what's gonna happen there? It's a monster places to trade, and we have here You know how I name it. Magnet. So this is our best place. If we can get there, it could be just amazing opportunity to start looking for the sells. Not to sell blindly, because sometimes for some reason, I don't know, but if I say it's time to start looking for possible sells, someone get me like, it's a full-time all-in sale. No, it's not. It means this is a great place to start looking for setups for sale and not sell blindly. At least a bounce with a candle pattern, at least. So I have to be more accurate with my words, because when I say start looking for sales, someone for some reason hear me saying sell all in. I don't know why. So we're still long there. We have these levels to pay attention to. That's the duplication of this cycle. We might get a bounce from, but by ideal we are to here. As per days, we are now on 17th. We have 90, 20, 21, 22 to put up the pressure. You can see that here, right here, right? And that's where we have to pay attention to. Now, the weekly is still up, the daily is still up. We don't have any signs against. What would be the signs against, guys? I always talk about it. It's time to repeat. We neither get a false breaks and convergences. So a false break up and convergence down, that's a warning sign. But we can also have triple cycle down, double cycle up, like 1, 2, 3, 1, 2, and a breakout. If that happens, that's a warning sign for short term. Then we expect a deeper correction, and then we will be again joining the ups. Make sense? So it's two ways to avoid the trend riding, and that's false breaks with convergence or triple double cycles. 3 moves down against your main direction, 2 waves up correction, boom, breakout. That's a sign to be careful about. Now, that's for the Euro Yen. Dollar Yen is a beast by itself. From previous week, we got this convergence, we got a correction down, we got a beautiful move up. It can still remain in this sensitivity zone due to the false breaks and the attempts for lower lows. So there is a chance we're gonna play in kind of a range, or it could be kind of a wedge as well. There is a chance for that, but generally this is our critical area, and why we remain above it, we don't close below that, the buys plan remains on, and there is a very good chance we are going to see that continuing climbing. Now this is a range from the daily chart, so that could still take us to above the middle and maybe all the way to the top. So you know the invalidation plan. And one more that follows beautifully the plan is CAD Yen, which I believe is here. Okay, we have the first magnet zone here. Okay, sorry, just had my cough. I had to pause the video. Some allergic period here, so not my best. So we have these 2 levels, guys. Okay, and we have this. I believe we are going to that place right here. That's 94, 95. But we do have to pay attention to this level. There is a potential divergence forming right on 2 cycles, 61. We have to give it a real value, and also the 4-hour chart here is doing for us what? Let's see. We have this ugly up, and it's kind of a special cycle here. We can split it to triple here, but I like it less. 1, 2, and big 3. I like it less. No, it's more like a special cycle. But now we need to pay attention to, guys. Why? Because we do have the false breaks. We had 1 false break on the horizontal level here, and 1 false break, which actually no, it was no divergence here, so our divergence is going through these highs, right? And we have it on the 4-hour chart. Yep, we have it here. So basically it's a warning sign here to start to pay attention to for possible short-term retraces. Remember the triple idea, 1 2 3 1 2, and breakout, it's a warning sign. It can also make a straight move down for a convergence and then make pullbacks and sells. So short-term retraces are more than acceptable. We will want to see it pulling back down to provide us, and it should be 2 waves on the 4-hour chart or daily, or a range. Right? So basically it could be something like that. By the way, if you can see, if you can hear the kids going nuts, they get some present to my older son's birthday. They got, of course, both some presents, and they just woohoo, all partying there. So if you can hear the happiness screaming, that's because of that. That's not because of the peeps that they made. They don't care. Who cares, right? That they made, that they can do it. But these peeps actually allow them this little toys to enjoy from. So that's for CAD yen, guys, and because we are with the weekly direction, we want to see 2 waves down or a range on the 4-hour chart, daily or 4-hour. Why? Because we joined the weekly. So down to 2 maximum time frames. And there is a gap here. So technically we can even get this and then a fly. That would be an ideal, of course, but every 2 waves or a bottom of range on a 4-hour chart or daily, and we are for buys, okay? So we have, that's for CAD yen. Then our when we get a pullback, we are aiming to here. Oh well, how's the yen? Too tricky to me. Too tricky to me. Nah, you know what, guys? I'm gonna skip that. I don't have a clear read here. Sorry. New Zealandian yen also has 2 possibilities. Now I want to discuss about it, guys. From one side we have this range, which means we can go all the way down to the bottom of this range. But there is a wonderful opportunity that we are in this movement, which means we can still climb higher to this magnet zone until the next divergence completes itself. And technically we can even see that going to here. Duplication of the big 2, 161 of this. So we also got on the daily cycle here a complete turnaround after a bullish divergence we had here. Sorry, guys. So after this divergence completed, we have the turnaround, and it looks good. Now we have the double cycle up. By ideal, if we are going to ride the weekly, what's going to happen here is 1 2 3, and then we're going to see 1 2 and the continuation. That's by ideal what's going to happen. But for us, basically, still both scenarios are valid. We can continue the climb higher as long as this weekly cycle develop, and we can break below and go to the down of the range. Both scenarios in play in such situations. What is important to pay attention to, that's invalidations, and our invalidation would be here. So as long as we are to the upside and we are above here, classical, we can expect the continuation. Below that, careful, bears might take the control. And if we take a look on some levels here, we also have on the 4 hour, we don't have, but 1 hour chart, we have 1 2 classical levels to pay attention to, which might be updated according to the market movements. Okay, but every opportunity we get to the bounce could be a move up. Yen pairs are very sensitive this week. 1, because of North Korea and the US situation. 2, because of the monetary policy in the US with the cash rate, and in Japan. So careful with the yen pairs, guys. Don't say, did not say that. I expect them, the yen pairs, to be the most moving probably during this week. If previous week that was Swiss pairs and pound pairs mainly, then these pairs would be, this week I expect the yen pairs to be monsters. And just be careful, we have important news there. Alright, guys, let's continue. Euro Kiwi, our plan does not change while we are below the highs. We expect the continuation lower. I would expect the triple cycle target to be reached. And we are going to 38.2 or 50. So while we have dropping highs, dropping lows, bearish plan remains on. Invalidation would be break above the highs and hold above it. So Euro Kiwi, we are to 38.2 and 50%. Corrections. Aussie Kiwi, well, this one is a really interesting one because you remember the view, guys, we need double cycle down as a correction, and we got it here. We got this one, but this one turned to be kind of a double top. So we start the count, 1, 2, and that means we would be looking for possible rebuys from these areas. Now, that could continue lower. We are good for 109, we are good for 108, we are even good to 107, which is this amazing classical area. You see that, guys, here? Beautiful supportive zone, supportive area, and would be also a 200 moving average meeting. But for long run, we would be looking to switch to buys due to the monthly and the weekly cycles that we expect later on continue higher. So pullbacks on the current view, as long as the highs remain going lower and the lows going lower, we remain short-term possible corrections. 109, 108, 107 definitely possible targets, as long as we don't develop the bullish divergences completed with us to the upside, both daily and 4-hour chart, because we joined the weekly and monthly cycles. As long as we don't have the signs on the daily and 4-hour chart combined with the divergences, we don't go for long-term buys. Aussie dollar, well, Aussie dollar is a bit tricky, but still on. As long as we hold above this area, I'm only for buys for the long term. And the New Zealandian dollar, well, this one is a beast. My plan from previous week does not change, basically. It's like with the New Zealand yen, we can have one more push to the upside all the way. Is pretty easy. Take a look. You see yourself, guys, right? And the duplication would give us a beautiful magnet here, right? You see that? So we can all the way climb to here, we can even climb higher. It's more than acceptable. On the same time, we have the double cycle of this, so we can expect it to go to 38.2 or lower, and this is a kind of a range. So both cycles are tradable, both are doable, and the invalidation for the New Zealandian dollar would be basically break below the last low. Invalidation for looking for buys. So, like I said for the Eurodollar, sorry guys, like I said with the Eurodollar, same with the New Zealandian dollar, it's simply not the best of the pairs to trade. As simple as that. And as long as lows are respected and we have the highs, of course buys are acceptable. We saw the weekly cycle, it could take us to the next magnet zones, but we do have to remember that 2 cycles in play here, which means our risk should be much smaller and our setups should be shorter terms. Here, not as with the pound pairs the previous week, we don't have clear one direction like we had there all the cycles, weekly, daily, 4-hour up. Here, they are controversial. That's why we trade lower risks and only for the short-term setups. For long-term setups, there is nothing to do here. Well, Swiss yen, same story, beautiful rally as we expected. We were looking to protect the trend line, and as long as this trend line in play, we are bullish, break below the trend line, and we are bearish. And this would be the same for this week. As long as we are up, we can climb all the way to the previous highs, continuing with the beautiful bullish hidden divergence, reach the previous highs, maybe even take the new highs on 120 level, break below the trend line, and game change. We have to become very careful. I told you guys before, be careful with the yen pairs. They are very tricky this week. Gold and silver, we are short from short term from previous week. As for this convergence, we got a beautiful move down. So this would be our invalidation while we are below and don't close below above that. We are for sell. And until where? That's a great question. 50% of this, which was reached, is first target, and 38.2 of this double cycle, which is here. Okay, so we pay attention to this targets. From there we will be looking to switch and look for buys again, but currently game did not change. We remain bearish. Silver, same story. While we are below this high, we are for sales. Triple cycle target 50%, it's here, and the next one is here, the 38.2 of this one, and then the biggest one this cycle. So that's where we go with the silver, as long as the highs keep creating lower highs and we remain below the invalidation zone. In this, well, first of all, oil. Where is my oil spirit? Oil, after breaking the trend line here, my view was and remains bullish, guys. No change in my view. Short-term pullbacks are acceptable. They are more than possible. But for long-term, we are on after buys again with the weekly cycle. Like with the pound yen, remember? Special move, range, and we expect the continuation while we are above this bottom of range. Indices, well, you know what? No, before that, cat pairs. Now, the cat pair, I don't have any change. We have the news to come this week with the CPI and the annual one, inflation report. Every rally, we need in 2 waves, and daily or 4-hour chart, and we are for sales. Now, we got this, right? And it's trying to break the trend line, but it couldn't really yet. So this could turn to be just a bigger cycle correction, but this is our critical zone. That's a bank zone for us. And the higher we can climb towards that, the better the sales should be later on. With the news this week, that could happen. And we had the New Zealandian cut from previous week as well. Sell rallies we got, but the only problem with this pair is what? That we are stuck in this one candle play. Not the best startable conditions. Still we need 2 waves rally or a range forming like to here, and then we'll be looking for sell the top of the range. Remember, because we joined the weekly cycles, we must have the correction on the daily or the 4-hour chart, not 15 minutes. Not 50 minutes. I got email this week and it was about that exactly. Like, Vlad, but you said bearish. Yeah, I did. But I said we joined the weekly cycle. Why 15 minutes is in play? Right? So we must have the setups from the daily or 4-hour chart. We have to be very clear here because we're joining the weekly cycle. If we would join the 1-hour chart cycle, yeah, you can play 15 minutes. Why to do that on weekly cycle? So we are still stuck inside one candle. This is really not the best setup, but we need the double cycle pullback or the top of the range, and then we would be looking for the resell opportunities. Currently it's correcting and it looks good, and the higher we go, the better the next sell should become. And a few words about the indices, where they are. Nasdaq breaking the last highs. As long as we don't have the invalidation, and this is our current invalidation, we can expect 6100 or 6200 in play. For S&P, that could be 2520, 2530. We can see, as we had false breaks, we never got yet a convergence on a daily chart. No convergence, no sells yet. So it's currently remains bullish. I'm not going to buy here, doesn't matter what happens, because I don't never trade against monthly, weekly, daily cycles combos. So just waiting for my next sell opportunity, which currently seems not here. So basically I'm neutral. The rallies can continue a bit, but that's against all of my principles, so I cannot do that for sure. DAX is a very interesting one. It has the double cycle pullback while these low holds and this high hold, sorry, and we get a break below the trend line. We can then start looking for possible sells again, and one of our best here sorry, that's this beauty and the beast, the Ftse, which drops down with the strength of the pound. breaking our range that we have been talking about in the Traders Academy Club for a while. I expect the continuation. Now we have the beautiful cycles here. We have this level to be retested. We have the next one to be retested. Bearish. As long as we have these lower highs going on the daily. Now lower lows on the daily. No divergence up against. Why to be against that? So this one is bearish for us, and we remain bearish on that. For detailed report and opportunities, guys, this is inside Traders Academy Club, a club which you want to be part of. And that would be basically all for this week. That's been a lot. I'm sorry for that. 45 minutes, guys. Sorry, took a lot of time of yours. Just plenty of things to cover, and I just wanted to go over all that. Once again, guys, I would like to invite you to be, unless you are already a part of Traders Academy Club, its mission was and remains to bring you quality, to bring you the directions which we will be able to trade. I'm very proud to say that this club turned to be much more positive feedback than I could even expect when just made the switch. So thank you for all of you that already are part. Those of you who are not yet in, it's time to be in, because that's where we do the real hardcore trading, cycle analysis, direction choosing, validation, invalidation plan, the most professional way trading should be. You would never see me going just, oh, this is a beautiful support, this is a beautiful candle, let's attack. That's because this is not trading. Trading means value the money flow, real money flow. Analysis, understand where the big money is, understand where the main directions are, and choose the directions, and then with the statistics go and make profits. And also, of course, suitable for investments like we have for many pairs going now. So I invite you to take part, guys. If you enjoyed the video and if you find it useful and you find some benefits by watching this video, please show your appreciations back, and I really thank you for that. Just click the like button, so subscribe to the channel, and leave your feedback. What do you think about the video? What do you think about the moves, the directions, the pairs analysis? Your feedback, my motivation to keep doing that. And thank you for your time you dedicate to watch my videos. And I apologize of your friends or your family who have been waiting you because of watching my video. I wish you a wonderful trading week, and I wish you wonderful personal things to happen to you during the week. Thank you for your time. I'll see you in the Traders Academy with the live trading rooms. Bye for now.